my YouTube followers, the over 6,000 subscribers. I appreciate your presence and I appreciate your attention. And I've had over 2 million views, so there's good things happening on the Stephen Williams Show. I'm coming to you from my studios right here in the Niagara Falls region. Today I want to talk to you about how to borrow money securely, how to get a loan securely. And I hope that from this you will learn something, because there are a lot of us, we borrow money but we don't do it securely and we end up in problems. There are ways to go about borrowing money, and there are other ways not to go about borrowing money. Alright, so there's a right way, in other words, and there's a wrong way to borrow money. Let's look at the wrong way first of all. If you are taking out a loan and you have not considered how you're going to pay back this loan, then you are asking for trouble. Because when you're borrowing money, you remember now you're putting you're taking on some amount of risk, right? Because first thing is that when you're borrowing money, there must be security for that loan. What are you going to present to the lender to say, I have this or I have that to secure the loan, I am sure I can pay it back? So you've got to think about it. How are you going to pay back this loan? Don't just go out and say, I want the money, I'm going to just borrow, and you borrow at will. No, you've got to know how you're going to pay back the money. Your income must exceed your expenses when you're borrowing money. You got to count the cost. You got to look at how much money you have coming in, how much money you have going out. You got to look at all of your expenses, document them, and look at all of your income, document them or it. And if you are satisfied that you can make this payment, by all means, it's okay to borrow money, right? It's okay to borrow money, but just be sure that you know where the money is going to come from. Because two of the main things that the lender look at is, one, your income, and two, security. Because the people want back their money. They're lending you, they're taking a risk. Sometimes this money that they're lending you is other people's money. So they will want to know, how are you going to pay back this money? They need security, right? So what are you presenting? What asset do you have presenting to the borrower that if I default, then this is my security for the loan? You've got to have that well locked in before you approach even any lender. You got to have some stable income, maybe a stable job or a stable business, a business that's doing well, and you need some money to enhance your business. It's okay to borrow that time, right? Some people borrow, to invest in real estate. Some people borrow money to invest in a business. Some people borrow money to do various things, buy a car, buy a second home, etc., etc. And the good news is that some people borrow money and they use that borrowed money to build wealth for themselves. People borrow money and they get rich. If you know what you're doing, you can borrow money and get rich. Yes, you can. But you can also borrow money and bankrupt yourself because you don't know what you're doing. So you've got to know what you're doing. You've got to sit down and count the cost. Yeah, you've got to do that. So don't just borrow foolishly, borrow wisely. Think about it. Do I have enough money at the end of the month to meet this payment? And by the way, how much is the payment? And you want to make sure the payment is not putting a noose around your neck. You want to make sure that what you're borrowing, you can pay back comfortably. That if tomorrow you miss a paycheck or whatever it is, you're not going to be, you're not going to roll over and die, so to speak. You can miss a paycheck and still service your loan. Okay? So I'm just here to help you. The wind is blowing. I see the curtain moving. Yeah, so you've got to think about these things carefully, because a lot of people have borrowed money and have done well and build a business or build a real estate empire. So I'm not going to tell people, oh, don't ever borrow money because blah, blah, blah. No, it's not true. There are people who have done it successfully, and there are others who have done it and they took on just more than they can manage. And guess what? They end up in bankruptcy, and then they blame the lender. You can't blame the lender for lending you money. No. And say they're wicked. No. They lend you their money. You fail to meet your obligation to pay back that money. They need back their money because they lend you people's money. Therefore, they have to take drastic action against you to pursue you for that money. So that is why I'm saying there are risk involved, but there is also reward. So you have got to count the cost. You have got to think carefully about what you're doing and make sure that you are doing it the right way. There are countless programs who tell you don't borrow money because you can hurt yourself. Yes, it's true, but you can also build wealth. You can make it if you know what you're doing. So it all depends on what you do and whether you stop to do the calculation, calculate the risk, calculate the rewards. Because as far as I'm concerned in life, there are no real absolutes. There are no real absolutes. Take for instance, I can decide to go in the stock market today, and guess what? I go in when the stock market is going up. I buy some stocks and the price just keep going up, and I'm making money like crazy. A next person comes in and they buy some stocks, and the timing was wrong. They bought and when the price was going in. Unfortunately, they come in when the price is going down, and they say, "Oh, I will never invest. I will never hear. I don't want to hear anything about the stock market. There, it's a ripoff and blah blah blah." No, it's about sometimes a little luck. It's about timing. Some people are expected to go in the stock market, for instance, to make a quick buck and get out. But sometimes when they put that money in, it's on the way down. And some of them are so foolish that they sit and they watch their money go down. No, you've got to also learn when you're, even though this program is not about the stock market, I'll do a program on that maybe in my next thing. But let me not divert too much. But the whole point is, sometimes it has to do with timing. I've learned over the years of being a financial advisor in my country, Jamaica. I've learned, and even in my own personal life, I have learned that a lot of things has to do with timing. When it comes to money and investing, timing. Take for instance, I know I'm stretching this program, and it was not my intention, but as thoughts come to mind, I have to share them with you. The real estate market in Canada, in Ontario the other day, was like booming. So people who got in, they buy a house, or they had a house, and they just saw that price skyrocket. Then here comes some people say, "Oh, I want to get in on the fun. I want to get in." Yeah, and so they come and some of them borrow money anywhere they could get it from, and they invest and buy some real estate, and before you know it, oh, the government realize that things are getting out of hand and they'll change, and the banks do this and do that, and so the prices start falling because they put these measures in place, like what's happening right now. The prices are falling, and some people are going to blame everybody for the problem, for the situation. No, the government and the banks are there to see that the economy is balanced. So they have to put measures in place, because if they did not step in and intervene, even now that price, maybe a $200,000 house would be worth $1 million now, right? So they had to step in and say, calm down and calm the market. And when they do that, they put measures into place and it corrects the market and the market goes down. Now, whose fault is it? Whose fault is it? It's just a matter of timing. You came in wrong. If you bought the house and you were expecting it to go up in value, but then the house start going down in value, who can you blame? Who can you blame? I don't know. Who can you blame? It's economics. Boom and bust. Cycles. Economies go through cycles. There are times when things are booming. The economy is doing well. Another time, oh, it's going down, and things are terrible, things are bad. The secret is we have to know how to function in both markets. That's the key. Knowing how to function in both market, knowing what to do and what not to do. Yeah? And that's why Warren Buffett, people rate that guy so. He says when everybody is selling, it's time to buy because the price is cheap. When everybody is buying, it's time to sell. And when everybody is selling, it's time to buy. When everybody is buying, it's time to sell. Makes a lot of sense. It's a lot of wisdom there, right? Because when everybody is buying, the price is going up. And when everybody is selling, the price is going down. So you seize an opportunity. But some people do the opposite. When everybody is buying, they are buying. When everybody is selling, they are selling. And so they get screwed. And then they find somebody to blame. You can't blame people. So I want to wrap up by just saying, do things wisely, calculate the costs. Don't think that there are any absolutes in life in terms of finances or any aspect of life. Sometimes you win, sometimes you lose. Finally, listen to this, and I want you to listen to me carefully as I end on this note. It's difficult to recover from a divorce. It's one of the toughest things, and people probably never ever get over a divorce. It's difficult to recover from the loss of a loved one, a child, a spouse. Those things are pain, and they pain forever when you lose a loved one. It's like you never get over it. Like I lost my big brother many years ago. He's a policeman, and I still miss my brother today. You just never get over that. However, when it comes to money, if you lose money, if you even go bankrupt tomorrow, guess what? You can always rebuild. That's the beauty about money. You can always start from scratch all over again. There are many people who have gone bankrupt, and it's not the end of the world. It's not. I'm telling you, it's not the end of the world if somebody goes bankrupt. If you lose everything, you can start from scratch again and build back even a bigger empire. That's how money works. If you know how money works, it's all in our mind. It's all in our mind. When you go bankrupt, how you see it, how you, some people will commit suicide, and other people, it's only a house, it's only a car, it's only money. It's okay, I'll build back. I'm going to challenge myself to build back. And you can pick yourself up. Yeah, you can pick yourself up, start from zero, and skyrocket again. You can recover from any money worries you have had. Bankruptcy, consumer proposal, wipe out, business down, you lost your house, you lost everything. But guess what? As long as you have life, there's hope that you can start all over again and build again and build a big empire for yourself and your family. I hope that you've learned something from this. As always, I'm not your financial advisor. I am just about talking about money and educating people on money. Don't offer financial advice on my channel. If you want financial advice, please remember, I am not your financial advisor. Go and talk to the licensed professional. I am not a financial advisor in Canada. I used to be in Jamaica, but I am no longer. But I've been trained in these things. So I hope that you've gotten something from this lecture, this whatever you want to call it, right? This discourse. And God bless you again. And I hope that you'll keep coming to my channel, because I am going to be talking about a lot of things as it relates to our financial life. Thank you. God bless. Goodbye as I turn off my camera.